a big part of capital is net worth. Net worth is not all of capital, though. So one of the common mistakes when talking about capital is to calculate net worth and then to finish there. When marking a case, if there's 5 marks for capital, 2 marks might be for net worth and for commenting on whether the net worth is good, bad, or otherwise. So take that into account. But we're talking right now about net worth. Other things that might be important in terms of capital are, where is the net worth? So for example, is it all just equity in the house because market prices have gone up, or do they have other liquid assets? But we're going to focus on net worth for the moment. So net worth is your assets minus your liabilities. So we're going to completely ignore leased items. You can make different arguments as to whether or not we should include them as debts or not, and some places do. But for consistency, we're just going to ignore them all the time. In capital, in capacity, we absolutely include a lease payment. But for capital, we ignore them. We include basically any other assets. Most common is going to be real estate, vehicles, and investments. We're going to include all debts. If it's revolving, so a credit card, a credit line, we're going to include the balance. So capacity, we include the limit. Capital, we include the balance. We want to know, we want to get a picture of how financially responsible these clients are that are in front of us. A negative net worth is bad, but we do need to consider the life stage. So for yourself, when you come out of school, you may have a negative net worth. You may not own a house. You may or may not own a vehicle. You probably won't have any investments, and you may have some substantive student loans. So we'd say, okay, if you're in your mid-20s, fresh out of school, you got a job in your field, you have a negative net worth, that's okay. If you looked at somebody in their mid-40s who's been working for 10 or 20 years and they had a negative net worth, we'd scratch our heads and say, is this really somebody we want to be doing business with? Let's take a look at an example of net worth. So another common mistake with net worth is to confuse balances with cash flows. So cash flows go into capacity, balances go into net worth. So the first thing I need to do, got some information on this client and I need to look at it. Their home, that's the value of their home, current value. We always want to go with current value. That's the value on their mortgage. You might be, wait a minute, didn't they have to put 5% down? Yeah, but there's still several very realistic ways that this happens. They pay $3,000 per month. Per month, that's a cash flow. So we are not going to use that value. Their credit card, $5,000 limit, $1,000 balance. Remember, capacity, we use the limit, but for net worth, we take the balance. Income. Is income an asset or a liability? Think of it this way. If I died tomorrow, would I have that? No. Past income may be an asset. So if I put it into the house, if I put it into a bank account, it may be an asset, but it would show up there. So I am not including that. Car of 20 grand, car loan of also 20 grand. So those two offset each other, but I'm still going to include both in the calculation. The car loan has payments of $500 per month. That's a cash flow. I'm not going to include that. So I have my assets. I have a house of $400,000. I have a car worth $20,000, and that's it. Liabilities or debts. I have a mortgage of $390. I have a credit card with a balance of $1, and I have a car loan of $20,000. So that gives me $411,000. So I net the two off. So my assets minus my liabilities equals my net worth. This individual has a net worth of $9,000. Now, could I have just netted these off here? Say their equity in the house is $10,000, their car is worth $0, and they have a credit card of $1. Yes, I would have arrived at the same number, but I think it's good to do that for practice. So $9,000. I need to comment, is this a good net worth? What I don't know is what life stage the individual's at. So if this were you, fresh out of school in a year or two, I would say, yeah, that's a pretty decent net worth. If this were me, I've been working for a while, I'd say that's a pretty weak net worth. As far as the course goes, I expect you to make a judgment. I'm not going to get real excited about whether or not your judgment is accurate, more so the fact that you've made a judgment. And over time, as you get experience, you'll learn a bit more as to what constitutes a decent net worth. But we're always considering it in light of what is their life cycle, what stage of life are they at.